What's up, YouTube? It's your boy B-Clyde87 checking in, and I'm back to let you into my Robinhood investment portfolio. Now, to say the stock market has been going crazy is an understatement. It's been going just absolutely bananas. Immediately after the stock split of Tesla and Apple, the market flew up. Everyone was making money. Practically, it was just raining gains. But then immediately after that, everything just dipped. The whole NASDAQ went down. Tesla shot down. Apple went down. Damn near the entire market crashed. But as of yesterday, the market has begun to kind of restabilize and things are starting to move back upward in a positive trend. So with that being said, I just want to go ahead and show you the current value of my portfolio, show you some of my wins, some of my losses, and then I want to take a deep dive into all 36 of the companies that I hold in my stock market portfolio. So if you like this video, just make sure that you click the like button. And if you're not already subscribed to the B-Clyde87 channel, be sure to subscribe to the B-Clyde87 channel for more content just like this. But with that said, let's go ahead and check out the current value. And the market is still open at the moment, so the number is going to be going up and down a little bit, but it's all good. We're at $11,227. As of today, my portfolio is up $85. For the week, the portfolio is down $219. For the month, the portfolio is up $50. For the past 3 months, the portfolio is up $559, and for the past year, the portfolio is up $484. So now let's go ahead and check out the companies that I hold in my portfolio. I'll show you the number of shares and my total gains. Now, I own Tesla. I have 5 shares of Teslas, and my total gains for Tesla is up $165. Then I also have Apple. I have 12 shares of Apple, and my total return is up $79. Then I have Microsoft. I have 6 shares of Microsoft, and my total return is up $138. Then I have HP, which is Hewlett Packard. I have 15 shares. Total return is up $39. After that, we have Bank of America. I have 18 shares. Total return, I'm up $26. Next, we have Realty Income. I have 3 shares. Total return is up $39. After that, we have STAG Industrial. I have 10 shares. Total return, I'm up $29. Next, we have Nike. I have 1 share. My total return is up $33. After that, we have Starbucks. I own 2 shares. My total return is up $30. Next, we have Rexford Industrial Realty. I have 3 shares. My total return is up $17. After that, we have Coca-Cola. I have 5 shares. My total return is up $22. After that, we have the Vanguard S&P 500 ETF VOO. I have 1 share. My total return is up $10. Next, we have Procter & Gamble. I have 1 share. My total return is up $16. Next, we have Johnson & Johnson. I have 1 share. My total return is up $1. After that, we have Cisco. I have 4 shares. My total return is down $7. Next, we have Enterprise Products. my shares are 10. I have 10 shares. Total return is down $1. After that, we have Intel. I have 1 share of Intel. My total return is down $9. After that, we have California Water. I hold 1 share. My total return is down $2. Next, we have Essential Utilities. I hold 1 share. My total return is down $5. After that, we have A.O. Smith. I hold 3 shares. Total return is down $6. After that, we have Pfizer. I have a little over 4 shares. Total return is down $16. Next, we have Walmart. I hold 1 share. Total return is up $10. After that, we have UGI. I have 10 shares. Total return is down $1. Next, we have Hormel. I hold 3 shares. Total return is up $3. Next, we have Hercules Capital. I have a little over 66 shares of Hercules Capital. My total return is up $1. After that, we have AT&T. I hold 30 shares of AT&T. Total return is down $56. After that, we have Nucor. I hold 1 share. Total return is up $2. Then we have Comcast. I hold 4 shares of Comcast. Total return is up $7. Then we have MSC Industrial Direct. I hold 5 shares. Total return is down $16. Then after that, we have a series of growth stocks that I hold. These next couple of stocks, they don't pay a dividend, but I'm holding on to them for the potential growth. So I'm hoping that the share price will go up so I can get the capital gains. So these are some of those growth stocks that I hold. We got Facebook, and I have just a little under 1 share, and I'm up $1. Next, we have Lincoln and Educational Services. I have 15 shares. Total return, I'm down $12. Next, we have Workhorse. I hold 1 share of Workhorse. Total return is up $7. Then we have Neo. I hold 1 share of Neo. Total return is up 70 cents. Then we have Pluralsight. I hold 1 share. Total return is down $2. After that, we have Flowers Food. Flowers Food is actually a dividend payer, and it's a pretty stable dividend payer. I hold 1 share, and total return, I'm down just 62 cents. And then we have Gold, Barrick Gold, 1 share. This one actually pays a dividend as well, and I'm up 69 cents. So those are the companies that I hold in my portfolio. And then if we switch it to total gain loss, we'll see it looks like Tesla is still my biggest winner within my portfolio. As you can see, these are the companies that I hold that have been up, and then these are the ones that have been down. It fluctuates. AT&T right now, I'm actually losing. I have the biggest loss at, but I'm holding AT&T for that high dividend. So as long as that dividend doesn't get touched, I'm going to keep holding on to AT&T. And in fact, if anything, I'm going to be purchasing more shares of it while it's at a discount, just so I can lower my average cost of AT&T. So that's why I'm holding that. And basically, as far as my portfolio, it's composed of a bunch of dividend paying stocks, companies that pay monthly in addition to quarterly. And then I've recently added a bunch of potential growth stocks. Those I'm holding on to for the capital gains. But for the most part, I definitely want to just be a dividend investor and get those dividends as passive income. And then just to go back to the volatility of the stock market and how it's been the last couple of days. I myself, I am trying to be a long-term investor, so I'm not really sweating as far as the prices have been going up and down. Basically, when the stock market goes down, you want to use that as an opportunity to buy the dip. The thing is, however, you want to be investing in companies that have a proven track record, companies that have been around for a long time, that have continued to grow, and companies that you foresee will still be around within the future. Now, some of the growth stocks or even the lower cap valued stocks, those are going to be riskier plays. But, then again, that's basically kind of what the stock market is. The stock market is not necessarily guaranteed money. Now, you can minimize your risk by investing in the bigger companies and the more stable companies. The thing with that is your gains probably won't be as big as if you were investing in a risky stock. So just overall, it's all about, where you're at, what you're comfortable with, what your risk tolerance is. Again, myself, I'm not tripping off of when the market goes down. If anything, when the market goes down, like I said, I just use it as an opportunity to get some of the companies that I want and that I want to hold. That's my opportunity to get them at a discounted price. So as far as what I have been doing, basically, I've just been trying to average into some of the companies that I currently hold, which is why a number of my shares, as you can see, they're like 0.02 and 0.27, 0.01, 0.16. Again, as I mentioned, I've just been using the features of fractional shares to just put in a little extra money to some of the companies that I already hold, because as I mentioned, this is a good buying opportunity that you definitely want to take advantage of. And then again, just the reasoning for, the volatility is, when basically a lot of those tech stocks were up, directly after that split, a lot of investors or even just a lot of traders were selling off their stocks and taking profits. And there's nothing wrong with that. If you're going to trade and if you're going to, take profits, you definitely, want to do that if you're going to do that. But as a long-term investor such as myself, I'm just going to continue to hold steadfast, and I'm going to continue to just, again, as I mentioned, buy into the companies that I want to hold. So that's the reason why I want to invest in the stock market. I'm looking at it for the long term. It's a marathon, not a sprint, and I'm trying to build some long-term wealth. So I'm going to continue just to hold on to companies like Tesla, Apple, Microsoft, Bank of America, Nike, Starbucks, Coca-Cola, Procter & Gamble, Johnson & Johnson, Pfizer, Hormel, AT&T, Comcast, Facebook. Like, these are companies that I believe are going to do well within the future. So I'm not selling, anything that's in my portfolio. And again, as I mentioned, I'm just going to continue to keep adding to the positions. And if anything more so, I'm just going to focus a little bit more on some of my dividend paying stocks, so I can at least make sure that I'm solidifying those monthly and quarterly dividend payments, because I want to use that as passive income for myself. Basically just to reinvest it into the market, and I can continue to keep buying more shares. And then as far as my growth stocks, I want to continue to keep holding on to those, and then I'm going to add to some of those positions for the capital gains. And again, as I mentioned, they may be a little bit riskier, but scared money don't make no money. So sometimes you have to take a little risk in order to get those big home run rewards. So with that said, that concludes the video for today. Again, that's what I've been doing as far as during this market. Basically what comes up must come down. And really, this was just a cooling off period. Don't forget, we're still in a global pandemic. A lot of people are still out of work, We got the uncertainty of the election coming up. We don't necessarily know what's going to occur as far as with the federal help or so. So like, it's just, there's a lot of uncertainty. And honestly, when the whole stock market was just on fire and everything was up, not too long ago, honestly, like, it was it was not sustainable because, again, as I mentioned, just we're still in a global pandemic and there's nothing to prove otherwise, or there's nothing to justify why everything was so expensive. So a lot of people sold off, they took their profits, and basically, like I said, just many of the companies are starting to, they cooled off. But now things are starting to stabilize and prices are starting to go back up. Again, as I mentioned, as of today, it's up. Last week it was down, but, for the past month it was up. In the past 3 months, it was still up. And just, that's the beauty of the stock market. It goes up and down. It's definitely a roller coaster ride, and it's not for the faint of heart. But believe me, the stock market is what separates, as far as, the commoners from the wealthy class. So you definitely should be invested in the stock market. And if you're not invested in the stock market at the moment, particularly using the Robinhood app, I want you to click the link in the description box so you can download the Robinhood app for your phone and you can start investing today. And once you create your profile with Robinhood, you're going to get your very first stock for free. So that's definitely something that you're going to want to do. You want to take advantage of that opportunity. And like I said, get started investing in the stock market. If anything, as a brand new investor, now is the time to invest in the stock market because, as I mentioned, a lot of prices have dropped off. Really, really good companies are finally at, their fair value. They're finally at a reasonable price. So this is the time that you do want to get into the market. If you're already investing in the market and you're thinking about, I need to dump my stocks, I need to sell because everything's going down, don't do that. The only real loss you're going to incur is once you sell your stock. So definitely don't do that. You just stay disciplined, you hold on, and you invest in good, solid companies. And as I mentioned, you take advantage of that dip when that opportunity presents itself. So yes, if you like this video, I want you to hit that like button and the bell notification so you can be notified every time I drop a video just like this. If you're not subscribed to the B Clarity 7 channel, I want you to subscribe to the channel. I drop videos just like this very regularly where I take you into my stock market investment portfolio to show you what's the companies that I hold. I give you, explanations why I hold these companies, and I show my dividends. And I want you to be a part of this journey with me. So yes, subscribe to the B Clarity 7 channel. And again, if you don't have the Robinhood app for your investing, click the link in the description box. Download the Robinhood app for your phone, create your profile, get your very first stock for free, and start investing in the stock market today. Peace, everybody. I hope you enjoy the rest of your day. I hope you continue to be safe, that you stay blessed, and you do something today that your future self is going to thank you for. Peace out.